Good evening, all the joinees. Hi, this is Ansu. I welcome you all to the webinar conducted by NGEN Markets. By the time the others join in, let's have a look at today's webinar topic. So today we would be majorly focusing on the performance of Indian markets and looking upon the sectoral indices, both BSE as well as NSE. Firstly, we would be looking upon the Markets tab. That is the section wherein you could see the movements or the levels of these index, and you can also compare them with the global indices as well. Following that, we would be moving towards the compare section. Now, that is a section wherein there are multiple parameters that could be used to decide upon the performance of the index. We would be looking upon the point to point and the risk versus return analysis. So, point to point lets you create in customized scenarios of your own and see which sector could have performed in a given time period that you have created. Followed by that is the risk versus return, which lets us see based on the time period that we set in what is the risk and returns generated by each of these index that we have loaded in. Followed by that, we would be looking upon the drawdowns and recovery analysis of these indices as well as their correlation, meaning how correlated are these sectors with each other in terms of their levels. Finally, the quorum would be open for a Q&A session. You can either unmute yourself or type down your queries in the chat box. So let us begin. Now, on NGEN Markets, the Markets tab is the landing page, and this is a section wherein our first half of our webinar topic would be related to. Now, in this overview section, when we come to the Markets tab, what you could see are these market levels. Certain market levels are mentioned right here. You could see in their current levels. Along with that, you could see the month to date as well as the year to date performance. Additionally, once you scroll down, you could see in the Indian equity sectoral indices, you can view this for both BSE indices as well as NSE indices. We have given in a toggle option. You simply do a tick on this checkbox and the sector now has changed to NSE indices. You could see in the list of NSE indices right here, their levels as well as their MTD and their YTD performance. Along with that, you could also see in this graphical manner the top 10 best performing NSE sectors because we had selected NSE indices, as well as the 10 worst performing NSE sectors. This data could be viewed in for the past 12 months, 6 months, 3 months, as well as 1 month. By default, it would anytime show 12-month performance when you look on this graphical representation, but you can anytime change the time period under consideration just by clicking on these data that you see. Additionally, on the right-hand side, bottommost section, you could also see the World Equity Market Index. Here again, we have provided in the name of these index their respective levels, as well as their MTD and their YTD. Now, these were certain data that we saw on a sectoral level as well as equity market data. Let's say you want to plot them and see their graphical movement. That happens right here in this markets chart. Now, how do you add in these sectoral data onto this market chart is simply you do a search in this blue colored box. So let's say I wish to analyze certain broad-based Indian indices. Let's say I search for maybe Nifty 50, search for the name, and you can simply add them in this market charts. I add in Nifty 500. Next, let's say I add in Nifty small cap 250 and also maybe a Nifty mid cap. Now, just by searching their name, these indices have gotten added in. Now, let's say you rather want to analyze the performance of these index, maybe for the past 2 years. So here as well, we have given in an option to change in the start period or start date that is under consideration. So here the option is mentioned as start date. Next to that, you simply click in this section wherein you could see that date. As I mentioned, we view this for the past 2 years. So I search for 2022. and I go to October. So I've selected 25th October 2022. And now it has picked up the start date as what has been mentioned, which is 25th October 2022. And the last date would be the last trading day. Now here, when we are looking upon this graph, we could see that each of these index is starting from a different level, meaning Nifty 50 is at 17,000, Nifty 500 at a 15,000, mid cap at 11,000, and small cap 250 at around 9,300. So a fair graphical representation at the moment is not possible, because just by looking at this graph, you could or you might think that Nifty 50, which is highlighted by this blue, is the index that is performing the best out of these four that I have currently taken in. But that is not the case. You could anytime see right here the returns generated by Nifty 50 is to an extent of 36% in the time period of last 2 years that we are looking upon. While out of these four index, the index that had performed the best was Nifty small cap to an extent of 85%. Now, in order to cater this problem, we have this option called as rebase. So once you do a tick on this checkbox, it picks up a common start point of 100, post which you can view a fair graphical representation of the index that you have loaded in the markets chart. Now, right here, you could see that this red or this maroon colored chart is at the top, which is the indicator or which is the color for Nifty small cap 250. And that is the reason you can see this is the index that had given the best performance in the past 2 years. And that is what we can see also on this line graph. Now, following that, we also have market wrap as an option. Let's say you wish to share this entire overview page with your client for a client engagement on a daily basis. You could simply click on this market wrap as an option. Once you click on that, the entire overview page gets instantly generated in a PDF format. And these market wraps are anytime co-branded in your premium login, meaning your company name and logo would appear on the top left-hand side. Now, the active indices that we had selected comes up in this PDF. Along with that, since we had selected NSE as a sector, that is the reason in this market wrap, this sector, NSE and NSE specific data has come up. If you had selected this BSE indices and then taken in a market wrap, the market wrap would show the specific BSE equity sectoral indices. Now, what we looked upon currently in this markets chart was basically broad-based Indian indices. Let's say I add in a touch of global index. So for that matter, let's say I add in maybe a FTSE 100, which is for UK markets, and as well maybe a Dow Jones, which is for an US market. So you simply search and you see these have gotten added in. So in the past 2 years, FTSE 100 gave in a return of 17.9%, while Dow Jones gave in a return of around 33%. Again, in comparison of all these index, Nifty small cap 250 had performed the best that way. And in a similar manner, generating this in a PDF format again remains the same. Simply click on market wrap, and the new index that have been added again comes up in this new market wrap that we just generated. Along with that, I simply changed the toggle bit from NSE to BSE, and now BSE specific index is something that comes up in this PDF. Now, this is how you add an index onto this markets chart. How could you delete any of these index? That as well is pretty simple. Simply click on this settings wheel. And let's say I wish to remove maybe a FTSE 100 as well a Dow Jones. Simply click on this delete icon. You see from this chart, these have gotten removed. Additionally, we also have an option to download the levels of any of the index that you load in this market chart. So we have provided this Excel download option. Simply click on that, and in an Excel format, you could see the levels of the index that you have loaded in the market charts from the start date that you have set it up until the end date. that would be the last trading day. So you could see it for 25th October. This data has come up. Now, this was the levels of index and its movement that we were able to view in this markets chart. Let's say you also wish to look upon certain other parameters, meaning what was the risk, the returns, the monthly returns, calendar year returns for each of these index. You could anytime move to our compare section, which lets you do that. So in the compare section, the option to add in a benchmark is right here. Add other items. You could search for these benchmarks. So let's say I again add in those 4 benchmarks that I had selected in the market section. So it is Nifty 50, Nifty 500, Nifty Mid Cap 150, and a Nifty Small Cap. So I have added in all these 4 index that I had loaded in the market section. Now, currently, the data that you would be viewing, let's say for that matter, the CAGR, standard deviation, Sharpe, Sortino, value at risk, these data would be since the inception of these respective index, meaning the CAGR of 12.16% for Nifty 500 is since its inception. Basically, because we have not yet input a common start date, and the option is available right here. You again click on this settings wheel and put in a time period under consideration. Let's say I take in similar time period of 2 years. I've taken in 25th October 2022 and I hit go. Now here you see these data points have changed that way. And now let's say I sort these index based on its volatility, which is standard deviation. You could click on the column heading and the data can get arranged either in the ascending or in the descending order. So in terms of its risk, Nifty Small Cap 250 out of these 4 is the one, the index that has been taking in higher level of risk to an extent of 15.79%. But at the same time, it is able to generate the highest return to an extent of 35.9%. And that is what we had seen in the market section, that Nifty Small Cap 250 was the one that generated the best return in the past 2 years. That was under consideration. So you could say, although it is taking in higher level of risk, it is compensating that with a higher level of returns in the time period of past 2 years. Now you have an option to add in multiple index right here. And what you could do is save this list as well. So you come right here in this section, type in a name and click on the save icon. So the next time you log into the platform, you simply need to go to this My List and select the list that you had created. So this is the list that I just created. Simply click on the name of the list and all the components that were there in the list will load up accordingly. Now, this was certain broad-based index that we were looking upon. Let's say I wish to analyze certain sectoral indices, BSC specific sectoral indices. So you can either add all those index right here. I have anyways created a list of this. So I go to this My List and I select the list of BSC indices that I have loaded in. So around 9 BSC sectoral indices is something that I have currently loaded in. The process remains the same. You go to the settings wheel, change in the time period under consideration. Let's say I run the analysis on these sectoral indices maybe for the past 5 years. So I take in 25th October 2019 and I hit go. And let's say I again look upon maybe at the risk parameters, which happens to be standard deviation. I click on the column heading and it says that BSE metal as a sector is the one that has been taking the highest level of risk in the past 5 years that is under consideration. And the least level of risk or the least volatile sector happens to be BSE FMCG. The risk comes to be a total of 16.5% only. Next, talking about risk, we can anytime look upon VAR, which is an abbreviation for value at risk. Meaning, what is the value of these sectors that is at a risk. At a risk of what? At a risk of losing. So VAR basically highlights the downside risk. Now, for example, what does this say is that with a 95% confidence interval, there is a 5% probability that if history were to repeat itself, BSc FMCG, let's say we look upon BSc FMCG, this is a sector with a 95% confidence interval. There is a 5% chance that this sector will have capital erosion to an extent of 21.8 percentage, meaning the capital moving out would be to an extent of 21.8 percentage. If we put this in simple terms, it basically says that if 100 rupees is invested in this sector, BSc FMCG, the capital erosion, capital that would be wiped out would be to an extent of 21 percentage, while the capital that remains intact or rather stays protected would be around 79 or 80 rupees. Now, we can clearly see that the sector that has higher level of risk also has a higher value at risk, which makes clear sense. Higher is the volatility, higher would be its higher would be the option to lose the amount. Next, if at all I sort this on the basis of CAGR, what we could see right here is this specific sector, which is healthcare. It is generating a return to an extent of 26 percentage, while the volatility happens to be only 17 percentage, meaning with a considerable lower amount of risk, it is able to generate a higher level of return, meaning the returns are also higher than that of BSE Sensex. If at all you look upon for BSE Sensex, the risk happens to be at an extent of 19 percentage, while the return is considerably even lower than that of the risk. The returns are only to an extent of 15 percentage. Next, I move on to drawdowns. Now, this basically lets us see the strength to recover from any loss that has happened in the past. Ability to recover from the loss that has happened in the past. Let's say here as well, I put in a time period of maybe the last 5 years. That is what we had taken under consideration. So I'll select October 25, 2019. And here, what you could see is the top 5 losses, the worst loss, of course, being in the first box. So here, there are 3 columns that you could see. Size, firstly, letting you see what is the magnitude of loss that has been experienced. Followed by that is length, which lets you see the number of times or the number of days the loss continued. Followed by that is the recovery, which lets you see within how many working days did this sector recover from any of the loss that has happened. Now, in order to understand this in detail, let's say I select a specific sector, which is a BSc FMCG, and I click on this graph-like icon. So here you could see it has been mentioned as the loss was to an extent of 29.5 percentage, wherein the level was at 12,316 for these BSc FMCG sector, and this started falling and it reached a level of 8,672. Now, when did this downfall happen or rather drawdown happen? 7th November 2019 till 23rd March 2020. Its level started falling. And post this end date of 23rd March 2020, it took a total of 188 days for it to recover, meaning 188 days to cross this start level of 12,316. Only then you could say that it has completely recovered from this loss of 29.5 percentage. And we also mentioned when did the recovery happen. It happened on 10th December 2020. Now, this can also be verified on this line graph as well. So the white region shows the recovery phase, while the gray region shows the drawdown phase. Now, let's say I try to locate this 10th December 2020. So I'll kind of highlight this section. Yeah, so right here you could see I've kept my cursor on this line graph of 10th December 2020 and it says 12,585, which is higher than our start price. Our start price was 12,360, and that is the reason 10th December has been mentioned as the recovery date for this loss of 29.5%. Now, what we had seen, length. Here, for the FMCG, BSC FMCG, you could see the length of the loss was to an extent of 137%, meaning from this start date up until this end date, there has been a total of 137 working days. For 137 days, the level kept on falling, post which it took 188 days for this sector to recover from this loss of 29.5%. Now, let's say I simply click on this recovery and sort it in an ascending order. So you could see BSE Healthcare is the sector which had a loss of 24%, wherein the loss continued for a total of 32 days, while it took only 13 days for this sector to recover from its worst loss, which was to an extent of 24%. This was drawdowns, which lets you see how is the sector, or for that matter a fund, recovering from any loss that has happened in the past. Now let's say you rather wish to see how is the correlation between each of these sectors, meaning let's say you wish to create rather a model portfolio and you want to include funds from each of these sectors. How is the correlation between them, or rather the diversification metrics? So for that you move towards this correlation tab. So right here, this is the correlation matrix, which lets you see the directional similarity between every two sector. So for example, I keep my cursor right here on 0.37%. So this highlights BSC IT on the left hand side, and on top you could see BSC FMCG. Now this basically says that if BSC IT moves up, 37% of times BSC FMCG will also move up in the similar direction. Now, clearly, you could see that BSc IT and FMCG have fairly a very low correlation, meaning it is less than 0.5. So you can say that they have a fairly low correlation. And for that matter, BSc IT has very correlation with all the other sectors except for this BSc Sensex, meaning if BSc IT moves up 67% of times, BSc Sensex will also move up in the similar direction. Now, for example, if I look upon some other sector right here, BSc Metal and BSc Commodity, its correlation is to an extent of 0.87%. So this says that if BSc Metal moves up, BSc Commodity will also move up 87% of times. So you can rather decide to have either of these sectoral funds in your portfolio, because the final outcome, the final impact would be similar. Meaning if BSc Metal goes down, BSc Commodity funds would also go down in the similar direction. And on our platform, we calculate correlation on a daily basis, meaning we have 260 data points for the purpose of calculating correlation. So for that, I come to this charts section. So here you could see that we have daily levels that we calculate on the platform, and based on these, we calculate their correlations. So for 1 year, we have 260 data points for correlation. So accuracy in terms of this correlation, the movements of these sectors could be ensured on the platform. Next, I move on to the risk versus return scatter plot. Now, this lets you see, based on risk and returns as a parameter, how has the sector plotted itself. So for that, on the x-axis, we take in annualized risk, which is standard deviation. And on the y-axis, we take in annualized return. And the entire scatter plot is divided into 4 quadrants: low risk, high return, low risk, low return, high risk, high return, and high risk, low return. Now, depending on the time period that you set in, which could be changed, meaning the start date as well as the end date can be changed. Let's say the time period I consider is rather a 3-year time period. So I'll take in from October 25, 2021 till yesterday's date and I click on go. Now, right here, if at all I look upon BSE Realty, this lies in this high risk, high return quadrant, which takes up a risk of 26% and generates a return of 25%. While if I look upon BSE Metal, you could see its risk is 26%, which is similar to Realty, while the return is much lower that way. Now, in any situation, if you wish to select between either of these index, you can anytime go forward with Realty, because even with the similar level of risk, this Realty as a sector is able to generate a higher level of return. While if we look upon maybe BSE Sensex, it lies in this low risk, low return quadrant, meaning in the time period of 3 years that we are analyzing, it is taking in lower level of risk and as well generating a lower level of return as well. Now, let's say I again change the time period to maybe for the past 1 year. I'll take in 25th October 2023 and I'll hit go. BSE Realty still stands in this high risk, high return quadrant, while BSE Metal has rather moved towards the left hand side, meaning although the returns are same, meaning it is generating a moderate level of return, but considerably taking a lower level of risk. And as well, Sensex in the last 1 year as well has stayed in this low risk, low return quadrant. So such time period you can set in and see the movements of these index in the time period based on its risk and returns as a parameter. Followed by that, we move towards this point to point chart. Now, this is a section which lets you create in customized scenarios or customized time period of your own, meaning you can input a start date as well as an end date of your own. Now, for example, I have created in 3 periods. The first bucket is a 10-year time period, followed by the second is a 3-year, and the third bucket, second is a 5-year, and the third bucket is a 3-year time period analysis. Let's say I simply click on this sort as an option. So you see, in a time period of 10 years, the best final value with a lump sum investment of 1 crore could have given by BSE Realty as a sector to an extent of 5 crore. This data that we are currently viewing in terms of amount can also be seen in terms of percentage as well, that is CAGR. So I've simply toggled between this CAGR, click on this, and you see this data shows up in percentage format. So what we had seen was BSE Realty as a sector gave in the best return in a time period of 10 years, which when converted to percentage comes up to be 17%. If we look upon for the past 5 years, we see Realty again performing the best, giving a return to an extent of 31%. In a 3-year time period, BSE Auto gave in the best performance, followed by BSE Realty. So you could say that over the time period of past 10 years, BSE Realty has rather given a consistent performance that way. Now, as I mentioned, you can create in time period of your own. Let's say I create a month to date scenario in this fifth bucket. So I'll take in 2024, October 1st till October 24th, 2024. So we saw that in the month of October 2024, the markets were rather moving down, and that is what can also be highlighted in these sectoral indices as well. Now, the time period in this fifth bucket under consideration is less than a year. So I'll select this absolute as a toggle button. So you simply click on that. Let's say I saw this data. So the maximum loss or the sector that fell the most was BSC FMCG. The loss came to an extent of 10%, while the least loss-making sector was the IT. Yes, it was negative, but in consideration to the other sectors, the loss that was capped in was to an extent of negative 2%. Now, this data that you're seeing can also be viewed in a graphical manner. You simply click on this graph like icon, and this could be generated in a graphical format for which a screenshot could also be taken in. Now, this data that you see currently, the point-to-point analysis can anytime be generated in an Excel format too. Simply click on this Excel option and the entire data gets generated in an Excel format, also giving in the time period that you had set in. This was a point-to-point analysis wherein you set in specific time period under consideration. We also have this calendar years tab. Now, on an yearly basis, meaning Jan to December, on a yearly basis, it is showing you the returns that has been generated by each of these index. Let's say I saw this for the last 1 year, which is 2023. I simply click on the column heading. The data has gotten arranged. Either it gets arranged in ascending or the descending order. You see BSE Realty right here. It has generated the best return to an extent of 79%. And this data could be seen up until the inception of each of the fund. The yearly returns data could be seen from the inception of these respective funds. Now, this was our topic related webinar. If anyone has any query, you can either unmute yourself or type down your questions in the chat box.
Hello.
Yes, please go ahead.
Yeah, I am Prakash Praharaj, though we are not subscribing, but we propose to get to your platform shortly. Now,
Sure.
I have, this is a wonderful, very good presentation you have made. I want to know on smart beta funds, do you have any data and analysis?
Yes, absolutely. So, can you name one of them? I mean, do you want a Nifty Alpha 50? Will that work?
Alpha, or you can get, say, this low volatility HDFC low volatility fund, or
Sure,
UTI momentum fund, UTI 250 momentum fund.
sure. So, for any fund, you simply
Yeah,
go to the compare section as you can see on the screen and just type in the name. So, you UTI Nifty 200 Momentum 30
yeah,
Index Fund.
momentum, yes.
You click on this, it will get added as a component in the compare section. As you can see, it has gotten added, and you click on it. When you do that, a single fund analytics opens up.
Okay.
Right. Alternatively, you can just go back to the compare section, please. Yeah. So the AUM, the age, price, all of those details can definitely be seen.
Or otherwise, all the values, say your low volatility, momentum, value, or quality, alpha, all of them, can you make a comparison among and then find out which is giving the return
Yes,
during,
yes, that
yeah,
that can be
that.
done. You just have to go and search those funds and then proceed with the
Okay,
comparison.
okay,
The
okay,
method
okay,
is as I mentioned before.
okay, okay,
Yeah. Yeah.
okay. ठीक है, okay. Some other time when you please keep in mind on smart beta, you also make a presentation, maybe a smart presentation, but
Sure.
now clients are becoming more aware of it. So it will be a need of the future. So I think you have made very good presentation, very good analysis. So that will help us in
Sure.
deciding.
Sure.
Yeah,
Absolutely. We will
yeah,
definitely keep this in mind. Thank
yeah,
you.
yeah.
Any more questions? Please let us know.
Hello, I'm Santosh. The
Yes.
monthly SIP, what is that? Actually, we can calculate monthly SIP performance.
Yes, that is right. So either you can go at the top. So there's this monthly SIP tool. You click on this, and the entire tool gets loaded. You can either do this SIP simulation on a particular fund or an index, or for that matter, even a stock. So when you do that, you choose in a start date, you set in the end date, and then you click on run SIP. When you do that, an XIRR gets generated. So currently it's 62 installments, 6,20,000 rupees invested. That becomes a 12 lakh 69,000 final value. And month on month, as the installments went on coming in, this was the change in the portfolio value. This is what we kind of show here. There are also PDF reports that you can take of this SIP analysis.
Can we take multiple funds SIP analysis or SIP return?
Yeah, so yes, so that's possible in the compare section. And so let's clear everything here. So you, for example, load in any list of mutual funds. Let's say these are 5 example sample flexi cap funds. And then you head over to SIP tab, monthly SIP tab. When you go there, so again, it's the same way that it runs in a new tab, but this is for a list of funds, comparison SIP. So invested value, XIRR, final value across, this is the time period, 2019 to 2024. And all of this is editable. So installment amount can be edited.
Okay. Then we have to put the run SIP, correct?
Yes, yes. So, yeah, correct. So if you change anything, any parameter here, so let's say you change it to 10,000 and then you click on run SIP. When you do that, all of this change will take into effect.
Investor value, XIRR. Okay, yearly performance can we take? Yearly, sorry, month, that performance for 2009 to 2024. The
Right.
CAG.
Okay, if you want to take CAGR for a specific time period, then you go to point, right? So for a definite time period, let's say 2019 to 2024, again, this is editable. You can put in whatever date you wish to, and then you can sort it on the basis of these returns, and this will get converted into either CAGR or absolute, depending upon what you want to view. If the time period is more than 1 year, then CAGR will give you annualized returns.
No, I'm asking that actually, I'm checking that actually whether we find out that 1 year, 2 year, 3 year, 5 year return for these 5 funds can we take?
Yes, absolutely. So that happens in the main list then. If you want 1 year, 3 year, 5 year returns, so those are right here. You use the scroller to scroll. Currently, the time period that we've taken is last 5 years. That's why it's showing till 3 years. But if you take it for a time period beyond that, all of this data will show up here: 1 year, 2 year, 3 year returns. If
Okay.
you want practically calendar year returns, then we have a separate tab for that as well. So you go to calendar years tab. Here you can check December to Jan returns of each of these funds along with the benchmark in this case.
Okay, main list they're showing a SIP return only, correct?
No, main list will show you a point to point return, right?
Could you please take that main list, the first one? This SIP
Yeah.
return or lump sum return?
No, sir, this will always be point to point. For SIP, we have a separate tab altogether, right? There's a SIP tab.
Okay. Okay, thank you.
Yeah. Hello. Yes, please go ahead.
I just wanted to ask fund didn't get any weight in the benchmark.
Sorry, ma'am, your voice is not audible clearly. Can you please repeat your question?
Hello. Now
Uh,
Hello.
just one second, just one second. Yeah, can you please go ahead with your question?
Yeah, so I was asking, can you provide us the fund weight and the benchmark weight?
Ma'am, there's a lot of background noise. Unfortunately, I'm not able to hear your question clearly.
Hello, now can you hear me?
Yes, yeah, please go ahead.
Yeah, so I was asking, can you provide us the fund weightage and the benchmark weight?
Um, Sorry, do you mean the funds and their components weightages? Is that what you're trying to
Yes.
ask? Yeah, sure.
Yes.
Yeah. That can be done. You open a single fund in a new tab and the components are visible.
Where is the weightage that is being?
Yeah, sure. So you go to asset allocation, and this is where you will find weightages of the components. Right, so this is, for example, quant flexi-cap what we have loaded, and these are the current weightages of the stocks in their portfolios. So this is updated as of 30th of September, right? So Reliance Industries is there to an extent of 9.5% in the portfolio, right? And so on.
So what I wanted to do was I wanted to compare the fund weight with the benchmark weights.
Oh,
Yeah.
okay. So yeah, understand.
So for example, if the fund weightage is 9 and the benchmark weightage is 7. So
Sure.
what is the result? Like 9 minus 7.
Okay, understand. So then you need to check that in overlaps. However, index weights are directly not available. Therefore, you'll have to use a proxy of an index fund. So these are flexi caps. So what we will use as a proxy is a Nifty 500 index fund. So for that, you go at the top and just search for any fund that tracks Nifty 500. Just go to add a fund, add security mein. Yeah. Just type in Nifty 500. Index fund. So we can take in, yeah, this works. The first one, SBI Nifty 500 index fund. So this will track, or rather this will piggyback the investments of Nifty 500 because that's position overlap, right? So then you now go to position overlaps and then you check the weights. So now you will check with quant with SBI Nifty 500 index fund. So that happens to be 19%. You click on that and you can see, okay, Reliance Industries is held by Quant FlexiCap, which is an actively managed fund to an extent of 9.51. On the other hand, the index, or for that matter, the proxy that we have used, which is Nifty 500 index fund, it has to an extent of almost 5%, 4.99 to be precise. So therefore, the minimum of the two is the overlay.
Great. So one more thing. I didn't got like what we showed right now, the blue box. I understood that, but the green box, I'm confused about it. Like, how does it work? Green boxes which we see light green, dark green, that part.
Sure. So there is a color scale that we have given at the top. So if the overlap, meaning the common stocks are up to 20%, then it will be color coded into light green. Right? If that percentage of overlap of common stocks goes beyond 20 and is up to 40, then it will be color coded. That cell will be color coded as dark green and so on. 40 to 60 is yellow, 60 to 80 is pink, and then 80 to 100 is red color coded. Right? So the legends are practically mentioned at the top.
And if I click on any of the box, then that whole chart appears.
Yes, yeah. So if you click on any of the cells, right? So for example, Franklin India and SBI Nifty 500 index fund. When you click on the 39% cell, this box will open up, which will practically give you the split or the underlying as to what all stocks are similar and in what proportion. That is correct.
Okay. So any fund and any index I can take in that
Yes,
case.
any index fund. Correct, correct, correct.
Even if I want 2-3 funds and do index, then
Yeah. So whatever funds you need, just add to the compare section and then check it with a proxy of an index fund, which could be, close match. So then you can go forward with that. Yes.
okay. Thank you so much.
Thank you. All right. If there are no more questions, Ansu, we can close for today.
Okay,
Yes.
thank you. Thank you very much.
Thank you.
All right. Thank you all for joining in. You can anytime visit our YouTube page. We have a dedicated playlist for all the webinars that has been conducted up until now. Even today's webinar will get added into this playlist. Thank you all for joining in. Hope to see you again next week with a new topic. Thank you.